Hi everyone, my name is Mary, and there's a pair that I'm looking at for this week that is the week of April 10th. It's the Euro-New Zealand dollar, and that's considered to be one of the more exotic pairs. It's not as liquid, it's not as heavily traded as the Euro-US dollar or the Euro-Japanese yen, so you have to be more careful with the fills and the spreads. If you look at it on a monthly chart, you've got a monthly chart pattern with a potential very large head and shoulders pattern forming. You've got a bearish doji candlestick here, and you've got a weekly chart pattern that shows a similar situation with 3 downward candlesticks, and we have a daily chart pattern here which shows that there's a clear channel, a downward trending channel. This is a bearish cross, this is going bearish, and you can see that it looks like it's trying to hit the top of the channel, which would probably be in the 85 level. If there was a clear break out of this channel, then it would probably not be a good short, but from both a technical and a fundamental level, I do like this particular pair going into this week. I think the euro in particular moved to the upside against other currencies a little bit too much after the ECB meeting, and while President Trichet did say that he was going to continue to be on the alert for inflation, they didn't really give a clear commitment of how many rate hikes were going to occur over the 2011 period. They said they were going to continue to watch the various inflationary and other economic reports and respond to what was best at the time. But the euro made a big pop-up last week against the US dollar and also against the Japanese yen, and I believe may just probably overstretched to the upside. In addition, you've got the New Zealand dollar, which is in a very clear upward trending channel against all currencies. And of course, if you're shorting Euro New Zealand dollar, then essentially you're buying the New Zealand dollar, which is in a clear upward trend. Now, a lot of people think that the commodity currencies are overbought with commodities and with the stock market, and that they're due for a major correction. And I think this is probably true, but I don't think it's going to happen this week or next week. In fact, I think we probably won't see that until the Federal Reserve gives a clear signal that they're going to stop their quantitative easing program. And that may possibly happen at the next Fed meeting and later in April, but probably not until May or June. So in the meantime, we've got a strong upward trend in the commodity currencies, and the Australian dollar has been strong with the New Zealand dollar, but the reason the New Zealand dollar might be a little bit better is the fact that the EURNZD already cut rates by 50 basis points this year. So while there's a chance that the Reserve Bank of Australia might cut rates, it's less likely that the New Zealand bank would cut rates. So what I'm looking at is zooming into the 4-hour chart is potentially a good short at the top of this channel, and it looks like it is just about at the top of the channel now, which is Sunday evening, possibly going down to the bottom of the channel by Tuesday or Wednesday. Now, you always have to look at what economic reports are coming out during the week, of course, because you could have something that could really screw up your plans or cause extreme volatility in the market. Well, there's some reports for the New Zealand dollar that come out on Sunday. Those are reports that are a little bit less important than would be a major economic report like GDP growth or something like that. But the main one we have to be on alert for the commodity currencies and the Australian and New Zealand dollar is going to be on Thursday, because on Thursday you have the Chinese GDP and you also have the Chinese Producer Price Index and all these other Chinese reports. So if the Chinese GDP shows a big decline and the inflation prices are still high, that means that there are probably going to be more rate hikes from China coming. And it means that the Chinese growth is slowing down, which means the demand for commodities from Australia and to a lesser degree New Zealand is going to slow down. So the market has pretty much been ignoring the rate hikes by the Chinese this year. And I don't think that they're going to continue to ignore it forever, but I think probably over the next couple of weeks, unless the reports come out much worse than expected for China, the trend is still going to be up for for the Australian dollar and the New Zealand dollar, and probably for the Canadian dollar also. So that's why I think this is a good trade to take advantage of for the coming week. And it shows the potential of even having a bigger move downward later on in the year. We could see another move down to the 170 level, which might be a point that it would come to and test again before making another upward move.